According to Jake Claver, the XRP ledger will handle all of the funds. It sounds crazy, doesn't it? But pay attention, because I'm going to make all the connections for you. Before I forget, some exciting new information concerning Ripple Prime has recently come to light, and guess what's right in the midst of it all? Yes, XRP in an absurdly large way. Now let's examine Jake's meaning of all the money. Beginning in December, XRP and RLUSD will be routed from the XRP ledger and XRPL to EVM to Solana. Updates for the final ITS audit are in progress. The Axelar Solana integration ought to be operational after that. You're not alone if you're having trouble understanding something right now. This appears to be computer jargon that spilled onto your screen. But pay attention, you'll understand why Jake is making such a big statement after I explain what's really going on. Allow me to take you step by step through this. For interoperability and liquidity issues, this is significant. By connecting XRP and LUSD more directly to Solana, DeFi, and the trading ecosystem through Axelar, it can bolster Ripple's institutional narrative and, should volumes materialize, increase XRP's real usage. According to the tweet, RLUSD can migrate from the XRPL to the XRPL EVM sidechain to Solana as Axelar extends its bridge to the XRP. Axelar has already connected the XRPL EVM sidechain to dozens of other chains, and go live is scheduled for December following final audits. Solana is no longer a one-time event, but rather another high-liquid venue for the network. The consequences for Ripple are as follows. Ripple's RLUSD stablecoin is being positioned as a cross-chain dollar asset, operating initially on the XRP ledger and the EVM sidechain with Axelar and other bridges that make it accessible on several networks, such as Solana. This validates Ripple's institutional proposal for tokenization, payments, and global asset flows. One integration, many chains. Because XRPL can be tapped by banks and asset managers, but it will still reach ecosystems like Solana without the need for custom engineering for each chain. Naturally, there are also ramifications for XRP. The XRP ledger and the XRP LEVM sidechain are anticipated to be the primary locations for RLUSD transactions and apps, which use and burn XRP gas. To be honest, it won't play a significant role in this case. Just say, okay buddy, sit down, whenever you hear someone hype up the entire gas burn thing. This is the truth. We have burned perhaps 14 million XRP over the past 13 years, give or take. Imagine that the XRP ledger is used for every transaction that takes place anywhere in the world. I'm discussing everything. Are you aware of what burns? 30 to 40 million XRP a year, perhaps. That won't have a significant effect on us while we're still here. Therefore, don't get your hopes up on that front if the burn rate remains at its current level, okay? Just telling you the truth. Wrapped or bridged XRP can be used as collateral or yield-bearing capital on several chains for DeFi and real-world asset projects. Since Axelar and Squid make it possible to construct cross-chain routing with only one click. TVL linked to XRP and maybe deepening liquidity, regardless if the front-end user is on Solana or another network. Okay, so to help you understand what we're actually talking about with this whole all the money idea, I'd like to give you some genuine instances. Since it is an aspirational marketing language rather than a concrete prediction that every dollar, euro, or asset will exclusively use the XRP ledger, the phrase, all the money will run on the XRP ledger, is a meme-level way of saying that, in a full adoption scenario, the majority of global value transfers and payments could be routed through the XRP ledger as a neutral plumbing for banks, fintechs, CBDCs, stablecoins, and tokenized assets. Where did this phase come from? The phase resulted from long-standing XRP community narratives that present XRP as a universal bridge asset for liquidity and cross-border payments. When Ripple's CEO mentioned all the money on stage at XRPL events, it further solidified the idea that the tokens were ATM meme coins on the XRP ledger, blending with the meme culture around all the money over time. So this is what Brad does that I adore. He will simply add this element of curiosity to something that is already present in the community. In fact, it's quite brilliant. Advocates tend to focus on the technical aspects. Tokenized deposits, RLUSD, stablecoins, other fiat representatives issued on the XRPL and moving over its DEX, AMM and payment channels, tokenized real-world assets, and cross-border bank and remittance flows using XRPL as settlement and liquidity rail are typically what people mean when they say all the money. We are discussing real-world assets, commodities, and securities. DeFi is actively using XRP for fees and liquidity on the XRPL and/or its sidechains. Even though end users seldom use XRPL directly, it is the TCIP of value that the majority of institutions and applications tap into in this version. I felt that I should have done a little more research on your behalf. This is where it gets interesting, Ripple Prime. Although Ripple has previously declared that it has abandoned its former over-the-counter sales approach in favor of selling XRP through its on-demand liquidity offering, the company is still able to sell XRP to over-the-counter clients. However, through its acquisition of Hidden Road, Ripple has also introduced Ripple Prime, a new institutional-focused digital asset brokerage that allows U.S. institutions to carry out over-the-counter OTC stop trades in significant digital assets, including XRP. The same question keeps coming up in conversations. Where do institutions even get their XRP when the OTC desks eventually go down? The problem is that Ripple Prime is essentially the solution that is right in front of us. In summary, institutional clients can trade key digital assets, such as XRP, over the counter using the new platform Ripple Prime. This contrasts with Ripple's previous over-the-counter OTC sales strategy, which entails offering XRP for sale at a discount to skilled counterparties. Imagine approaching Ripple when XRP was only worth 25.30 cents and purchasing it for much less. While everyone else is playing checkers, discuss playing chess. This is where things start to get hot. Potential for the future. Institutional clients can now trade over-the-counter, OTC, with Ripple using the new Ripple Prime platform, which may be viewed as a new type of OTC sales. All well, but why should you give a damn? Wait a minute. Why is the pricing still the same? In just 2 weeks, we saw buy orders for XRP totaling over $500 million pass through these ETFs. You would think that would send the price skyrocketing. False. This is what's really happening. It's true that almost all of these transactions take place behind closed doors at OTC desks, which are private over-the-counter trading firms. Only a few billion XRP are currently stored on the OTC desks, most likely between 1 and 2 billion. When that well goes dry, what will happen? Institutions begin knocking on Ripple's door, and guess where they have to go shopping when Ripple gets low? Directly to the open markets. Only a specific amount of XRP can leak out each month thanks to Ripple's escrow structure. And they are currently having to make this important choice. To appease these ETF demands, do they open the floodgates and dump all that escrowed XRP? Or do they choose an alternative path and say, hey, we're letting go no more than 30%? The others, we're not stupid, so we're keeping ourselves tightly confined. Here's what keeps me awake at night. Go back to the previous year, and every month, a billion XRP would escape escrow like clockwork. However, notice that they usually push about 80% back in. We're talking about 800 million disappearing once more. This year, the same billion is released every month. Right now, we're witnessing about 70% of them being crammed back into escrow. Although it fluctuates from month to month, that is essentially where the needle is located. The last thing I want is to hit next year and watch them completely lose it. There is no relocking, because there is an overwhelming amount of supply that is being dumped into exchanges. And see, that's a catastrophe that no one wants to occur. I'm honestly baffled by what Ripple will do in this situation. It's not simply noise, which is why I keep telling you to pay attention to this stuff. This can cause XRP's price to skyrocket or plummet. I'm keeping tabs on every single breadcrumb on this and reporting back to you on the channel. So when we release stuff, slam those notification bells and lock in that follow button. You won't want to miss any of this, I promise.